Good afternoon, everyone. This is Sam, and I'll be doing the free YouTube video for February 26th, 2021. In this video, guys, I'd really like to show you the indexes and just kind of what I'm looking at in terms of the indexes potentially driving the action next week. This week was not particularly kind to the markets, and from a structural point of view, this is actually one of the I wouldn't say it's necessarily a red light, but it is a cautionary yellow light going into next week. And I really just want to show you the index pattern here. So I'm looking at the QQQ. This is the technology or the NASDAQ. And we were looking at this pattern last week where you had this kind of bearish looking you can call it like a dark cloud, whatever you want to call it, but it was a bearish candle that basically undid all of the previous action from the previous week. You see how it kind of swallows the candle there? You can probably call it an engulfing candle at this point. And it did it on larger volume than the week before. Right, so that was your first warning sign coming into this week that things might be a little bit hairy in terms of the tech stocks. Now, a lot of this has to do with what's going on in the bond market. We won't have time in this video to cover the extent of what's going on in the bond market, but if you're interested in that, I definitely suggest you check out simplertrading.com/blog. It's free, and you get to read all about what's happening here. So you'll get to read about the dynamic in bonds that was likely the culprit behind the weakness in tech. But this candle there that we're looking at, it's actually a two-bar pattern. So the first candle, which happened last week, is your yellow light. The second candle is really the tell, and it basically acts as the trigger. So what's the trigger on this pattern? When you close below the low of the caution candle. Okay, so that was already, just on that alone, it's enough to warrant caution. Now, did we do it on large volume? I laugh because the answer is an incredible yes. This is the highest volume that we've had. Wow. I don't have higher volume here. Probably since August of last year, so even before the election. Highest volume, almost in a direct line downwards. Also, you took out the 8-period EMA on the weekly chart. You see how we had been kind of channeling here in this very aggressive upward channel between the upper Bollinger and the weekly 8. When that happens, you just naturally tend to fall back to your next support level, which comes in right around 307, 308, which is the weekly 21. You can see that was supportive back here, and I would expect that it still should act as support, but it's also, a considerable chunk away from where we currently are. If you look at the daily time frame here in the center, you'll see that you have a one dot squeeze to the downside. Well, it's not really a squeeze, just the histogram has gone negative. Now, again, always ask yourself, what's the pattern? What's the personality of this thing? Do you see any other negative histograms on this chart other than here? And the answer is no, right? Basically, and this is the election, by the way. Right here was the election. That was the last time that we had a negative histogram. So from the election, which was November of last year, all the way until this week, notice how tech has been in nothing but an uptrend. As of today, you officially have your first dot of the histogram. So can this recover? Absolutely it can, but we just have to weigh the evidence. And the evidence here is really, really strong that things, we want to see another card, essentially. So what that means is just a poker term. It means you're not going to bet, but you'll check and you want to see the next card. That's essentially the approach that I'm taking going into next week. Now, I do want to give you some stocks that I think look pretty good. One that I picked up today, and that was Williams-Sonoma. So this was one that came up in the room. Showed me really good relative strength, showed really good relative strength even during the selling this week, which is really ferocious in some stocks. And you can see here that Williams-Sonoma, WSM, held the moving averages. And in doing so, it actually is turning into a slingshot squeeze where you pull lower. It's like a rubber band. You pull it back, and then it gets the potential to snap forward. So I really like that. And then over here on the 195, which is 2 bars per day, 195 minutes, you have a very strong upward bias to it. So I did pick some of this today, pick up some of this today. I started kind of small, right? I only have a few verticals. I picked up the 125, 135, and then I also picked up the 130, 135 verticals for March expiration. But this is one of the stronger stocks, and I'm liking the relative outperformance that it's showing, both in up days where it was up more than the market today, and during down days where it was down less than the market during the drops this week. So the signals are pretty strong here. Good relative outperformance. A place I want to be if the indexes are going to hold. I'll give you one more here since we mentioned a little bit of gambling terminology. DraftKings. So online gambling, DraftKings. They reported earnings, I think, yesterday. Very strong chart, good looking squeeze, very good looking 195-minute squeeze, and very, very nice weekly trend here near an all-time high. So that's basically what I'm looking at. You see the all-time high there right around 65. You're a stone's throw away from that, and you're doing it. You got through earnings, great volume today, good acceptance of price, and this 195-minute squeeze is rather mint. So two different picks there for you. Notice that they're kind of on the periphery of the market. We're not looking at Amazon or Apple or Google here necessarily because those will only move with the market. We want to be in things, at least in my opinion, in a cautionary market, like I showed you on the QQQs to start the video. When you have a cautionary market and you're going to be long something, it's usually better to be long on the periphery. So something that's kind of a honey badger that can do its own thing, even if the indexes go sideways or don't trade well. So that's what we're looking at going into next week, guys. Is just the indexes is going to be priority number one. They need to recover, and they need to recover some of the levels, especially technology. And then two, if we can see that, I think that some of these setups and DraftKings, Williams Sonoma, Netflix, they do look pretty good for continuation. So going into next week, remember to prioritize the indexes first. Do all your work on the indexes. Make sure you like the market. Make sure you like the ocean before you jump on a boat and head out there. So you make sure that you're not taking your boat into a hurricane, if you know what I'm saying. So that's the video, guys. Hopefully this was informative. And again, if you want a little bit more information in terms of what happened with the bond market this week, check out the blog that we wrote. It's at simplertrading.com/blog. It's totally free. And if you like the stuff that we put out there, don't forget to subscribe to our channel. Don't forget to like the video. You can even leave a dislike. We don't mind. Just leave a like or a dislike. Let us know that you're here. Leave some footprints. And then lastly, if you really like our stuff, you want to jump into the room, see what we're trading, be a part of the community, make some friends, and make some money, come check us out at simplertrading.com and jump on a trial and jump in the room. We'd be happy to have you there. Cheers.